Hello everyone, this is Crypto BitLaw back with another blockchain legal brief. Today is Tuesday, February 10th, 2022, and today we're going to address the Commodities and Futures Trading Commission, or the CTFC as they're better known, and their push to oversee U.S. crypto markets. But before we dive in, if you enjoy this content, please hit that like button and subscribe to our channel. And with that said, let's tackle it. So as we can see here, the CFTC, they want to play a larger role in crypto regulation. Recently, there were a couple hearings before Congress, and the CFTC, the agency's chairman, he actually attended and advocated for having his agency play the primary role in regulating these digital assets. And the CEO of FTX, Sam Bankman-Fried, he attended these hearings, and he actually agreed with the chairman. So they say Rostin Behnam, the agency's chairman, argues that the CFTC is in the best position to regulate digital assets. The article continues that Rostin Behnam, chairman of the Commodities and Futures Trading Commission, or the CFTC, is pushing for his agency to take the leading role in regulating digital assets. He maintains that his agency is well positioned to provide market protection for consumers and reduce risks in the space. Behnam made his case for expanding the CFTC's authority in a letter to the House and Senate Agriculture Committees on Tuesday. He asserted that his agency already follows core principles that help sufficiently oversee a wide range of markets, and that the crypto market isn't an exception. The dispute on how crypto should be classified is a major source of tension between U.S. regulators and top industry players. While both the CFTC and Securities and Exchange Commission, or the SEC, remain confident that the current laws may be adequate, exchanges such as Coinbase are arguing a new federal regulator be created just for cryptocurrencies. But apparently that appears unlikely. A report in October suggested that the Biden administration was planning an executive order to organize research and regulation of crypto among pre-existing agencies. Behnam emphasized the need for better regulation soon, given the number of retail participants involved in the crypto trading market. In my opinion, he said, there are important principles missing from the current regulatory framework applicable to digital asset markets that we see in other federally regulated markets, particularly ones that primarily cater to retail investors. Earlier on Wednesday, Behnam testified before the Senate to elaborate on his position. Industry executives, including FTX CEO Sam Bankman-Fried, also attended. They say, the digital asset market, which at present is most directly supervised through state money transmitter licenses, is unique and presents many novel issues for the CFTC given our limited authority to police these volatile markets, Behnam added. Bankman-Fried, in agreeing with Behnam, said he'd prefer the CFTC help provide more regulatory clarity, adding, I would love to see the CFTC play a more active role. But a big problem is that SEC Chairman Gary Gensler feels the same way about his own agency vying for more control of various aspects of crypto markets and deeming most cryptocurrencies, possibly including stablecoins, securities. There are thousands of these projects basically trying to raise money from the public so that they can back an entrepreneurial idea, Gensler told CNBC last month. That part's all right. In fact, it's called innovation, but it's about bringing it into the securities laws. So essentially what we have here are these different federal agencies vying and competing with each other for who gets to have control over regulating these digital assets or cryptocurrencies. On one hand, you have the CFTC that is tasked with regulating commodities, and then on the other hand, you have the SEC, which is tasked with regulating securities, and they both want to expand their sphere of influence and their hegemony over control of the regulations of these digital assets, and they're competing with each other. It's kind of like you have these two competing fiefdoms where each one wants a bigger budget, they want more control, they want more employees. You know, that's what power does. Power begets power. It wants to grow. It wants to become larger. And so you have these two different agencies that are just competing with each other saying, hey, we should control it. No, we should control it. Ultimately, who's going to get to control it? I think that this is probably going to be an issue for Congress to decide through some sort of, regulatory framework that they issue via statutory law. So just to give you some perspective on why the Senate Agricultural Committee was holding these crypto hearings, we can dive a little deeper and just kind of give an overview. In sum, the CFTC chair, Rostin Behnam, testified before the Senate Agricultural Committee, as we alluded to earlier. Further, many commodities are agricultural products, but Bitcoin and derivatives are clearly not. So they say Behnam was making his case in front of the Senate Agricultural Committee. No, that's not a typo. The House and Senate Agricultural Committees are charged with overseeing the CFTC, and here's why. When the House Committee on Agriculture was formed in 1820, followed by the Senate Committee on Agriculture in 1825, the U.S. was largely an agrarian society. Over time, their duties have evolved to cover nutrition and forestry, but also the commodities produced by these industries. Think crops, meat, dairy, wood, so on and so forth. Commodities are goods or resources that are fungible. A barrel of oil or a bushel of wheat isn't unique like a non-fungible token or an NFT. In 1922, Congress passed the Grain Futures Act, which established the Grain Futures Administration. The agency was tasked with regulating commodity futures markets, which were operating in the same sort of Wild West as the crypto industry is today. Essentially, in addition to buying commodities, traders wanted to speculate on their future prices. They do so by creating contracts between buyers and sellers. If the price goes up to X amount, the trade is made. The 1936 Commodity Exchange Act went further, amending the 1922 legislation and mandating that the commodity futures and options trading be conducted on regulated exchanges. That's how, in the first half of the 20th century, the agricultural committees came to oversee financial markets. Commodities derivatives were getting traded. But if you haven't heard of the Grain Futures Administration, that's because it no longer exists. It was subsumed by the CFTC, established in 1974 under the oversight of the same committees that crafted the 1922 and 1936 Acts. The Commodity Futures Trading Commission is responsible for all derivatives markets, not just agricultural commodities. Want to hedge your Bitcoin holdings by holding an options contract to sell? You're in CFTC territory now. And the Senate Agricultural Committee has something to say about that. So that's why this Agricultural Committee is so wrapped up into the world of crypto. So I hope that clears a lot up. All in all, I hope you guys like this content. If you enjoyed it, please hit the like button. Please also subscribe to our channel. You can follow us on Twitter. On Twitter, our handle is @CryptoBitlaw. And with that said, we'll see you guys in the next one. Thanks for watching.